Hey everybody, welcome back to Trading ThinkScript. My name is Mike Fairbourn, Senior Manager Trading Derivatives at Charles Schwab. It's good to be back with you folks today. I was looking a lot during this week at the market, excessive volatility, massive VIX. We'll take a look at some of these figures here in just a moment, but really kind of tracking with the concept of volatility, looking at some of the betas out there, what we can do with ThinkScript to find those companies that are gaining strength in the market, especially relative to the market, but that are also having that reduced kind of volatility in case things do turn down. They're just not as volatile, but definitely looking for strength out in the market in a sea of, gosh, volatility across just numerous sectors here. But I'll look forward to diving into that with you. Joined in the chat by a good friend and colleague of mine. You'll see him in the chat. Hey, H, that would be Kevin Horner. And it's great to have Kevin Horner on board with us, folks. You can follow us both on X. Be sure to follow Kevin Horner, CS, Mike Fairbourn, CS as well. And hello to you, Rocky. We've got Richard, Scott, Michael, Will, John, the Noble Savage, and Life in the Fast Lane. Haven't seen Life in the Fast Lane for a little bit, but great to have Life in the Fast Lane back on board with us as well. Is Kevin, David, and Mighty Mouse. Good morning to Mighty Mouse. Okay, it's a good afternoon for me, so he might be also back in that time zone that Scott's in as well, as he always tells us, aloha there. But on that note, hey, let's dive into it. Let's take a look and see what we can spot using some simple ThinkScripts just to try to see where relative strength is at, but also keeping in mind the concept of that beta. We want that beta to be lower than the market. So looking forward to it. All right. In terms of our disclosures, the information here is for general information purposes only and should not be considered an individualized recommendation. Paper Money software application is provided for educational purposes only as well. Okay, backtesting results, as we always like to say here. Backtesting results are hypothetical. There is no guarantee that the same strategy implemented today would produce similar results. Okay, past performance of any security strategy does not guarantee future results or success. Investing does involve risk. I'm sure you all know that, but including for some products more than your initial investment. We do have a glance of futures here. I did want to talk about futures here for just a bit, just the charts. We do not trade futures here, but we did provide those disclosures because we do want to look at the charts. As it does state here, futures options trading involves substantial risk not suitable for all investors. And with that, let's just go ahead and share our screen right now. So first things first, looking at the market here and seeing where we're coming down, when we get the volatility increasing, folks, one thing we're going to see, and we've had a few classes on this as well, a few discussions on, let's say, for example, the ATR out there. What's the ATR been doing? Well, you kind of want to watch that ATR closely because it does give us a relative sense of the range, and we're talking about range bars. Now, again, we talked about it previously, it's a little bit ago, but the average true range is just a measure of the true range being the ranges of the bars on any given day. And you can see the range right up here. So the current range is 60.93. And let's see, the average true range has been increasing. That's just today. Now the day's not done. So that range could extend up or down, maybe more likely down because we're trading down right now. But as you can see over here, if we put an A in front of that, we're just averaging that out in terms of the ATR over here. Now, one of the things that the traders do like to look at in many cases is they'll look at prior highs, and they can also look for these levels sometimes to find support or resistance. And by the way, I will state this, at this massive decline, we actually had an ATR, and that would be the average range of the day. You're just going back, when we put the average in, we go back right to the default here, which is 14 days of that true range. So what is the average range over the last 14 days? We just take the range, get that the true range, the average of that over 14 bars, and you've got it. And that's this line over here. Now, watching this creep up can give us some very, very interesting insights, and we need to kind of watch that a little bit. I like to just go, I've got a daily 30 and 5 minute chart, just a quick click of the mouse just to kind of take a look. And you can see that it does look pretty bad. When you look at this bar coming down, one thing that intraday activity can kind of help us with is That right there. We've been here for a while. We've been here almost all day. See that first 30 minutes we dipped down here? We're not too far off that 30-minute. In fact, if I go like this, we don't know if there's going to be support in here or not. Looking at the daily chart, you could just look at it and say, my gosh, that looks a lot like what some term as a falling knife. And by the way, you never want to catch a falling knife. You can get hurt. And, it's just like looking at a big bar coming down. And we just don't know what to expect there. So there are some ranges over here to look at. So keep that in mind. Now, one thing I did want to talk about, though, are there a couple of different areas that we can look at. An area over here that I talk about in my markets and sectors class on Friday tomorrow is right about here. It's the sector rotation grid, and I've just put for a 1-week basis, and I've just put these. Let's see, I've put just a few different tabs up in here, so you can kind of take a look and see what we've got over here. I've actually got an S&P 500 equal weight along with the sectors out there in the market. This is all relative to the market, and I use this pretty frequently because it does tend to give us a sense short term what's happening. Like, say, for example, you have over here the market's dropping down. If we just look at the equal weight, actually that's incorrect. I'm sorry, that is not the equal weight. I was doing a little bit of investigating on the equal weight to try to find breadth on a relative basis, and I didn't do a great job of that. That's not the equal weight. Let's go ahead and just change this right now. I'm going to share this with you so you guys have these gadget windows as well. That would happen to be energy. So let's just do this. It's a very, very simple study I have over here. I just pieced together. You can just create this so easily. And by the way, if you put the little spaces after the quotation marks before and after, it makes it a little bit bigger and easier to see. I've noticed there's not a way to change that darn font that I've found yet. I haven't found it. If you guys have found it and would like to enlighten all of us, let me know. Here's energy. And now we're good. So I'm going to come over here and just resave this. Oh, not on demand. Not home screen either. Wow. Let's go back to on demand. Take it off. We'll go back to charts. We're going to kill it. Okay. We're going to go back and we're going to go over here. I'm going to resave this grid as and just update it, right? Back to my 1 week because it's showing us the relative strength of the market over that time frame. And I just did that. So that's been saved, resaved. So we're good to go here. There you go. That's energy. Energy obviously has been strong. So too is materials, and so too is some of the financials have been strong relative to the market over this time frame. I'm still in on demand, aren't I? Hold up. I knew these two were strong, but I'm like, wait a second. Goldman Sachs and some of these other companies have really been down. That's what caught my attention. And as you can see right there, financials have been underperforming. Okay, folks, we're out of the twilight zone and we're back to paper money, live paper money. Okay. All right. So this is energy up. Crude oil prices obviously have been strong. Most everything has been down with the exception of technology. Technology's been going sideways. This is so helpful, I think, because it's a 1 week observation. But I've noticed as I've gone through the 1 week in this class that I do teach, the markets and sectors, is that it can be a little bit volatile. I mean, you see, okay, it's good 1 week and then the next week, and it doesn't really look like a 1 month time frame. When I'm talking about 1 month, folks, I'm really looking at about roughly approximately 20 market days. I was working with it today because I've had some issues with RS in the past, or relative strength. And what I want to do is I want to show you guys how to, a simple script. It's so easy, but it actually will pinpoint relative strength stocks. And we can break these down also based upon, say, for example, the beta. And there's a really easy way to do that too. Anyways, side note, let's go over here. Let me show you this right now. Let's go back over here. Let me just share this actually with you all. And again, this is just a grid, but just while we're getting into this class, just always keep in mind that, and Kevin took the words right out of my mouth. There it is. ThinkScripts aren't guaranteed for timeliness or accuracy. There you go. That's exactly right. It's a grid, but there you go. Kevin Horner's got some great grids that he uses in the Trader Talks class, and this was the idea I got just from looking at his stuff to use it. So kudos to him for sure for doing that. Appreciate that, Kev. But if we come over here, we can look, say, for example, at if I wanted to go over here and I wanted to look at let's just go back to some regular charts. And I want to take a look at, let's say, our Market Watch tab over here. And I've got a few different tabs over here. And if I were to look at the S&P 500 collectively, yeah, we can pull it up quite fast. I wanted to note this right now because I did want to talk also about beta, because I'm going to incorporate, we're going to piece these two together. I want to look at relative strength and beta. So there are a couple of different betas. Now, the one we're after is this one right here. No, it's not yes, let me think. One of these doesn't work. Hang on a second. It is incorrect. And I'm going to show you which one is working as well. Remember beta, what beta does? Beta is a measurement of how volatile the stock is relative to the market. If we take a look at A over here, easy enough to do. I'm just going to go into the trade tab. I'm going to type in A right here. You'll notice over here the beta right over here is 1.299. That is the correct read. These are different. There are two that you have in here, and it's this one that's right. It's not the first one. So if I go back to it, customize, take this one out with our little metric there. Just take it out. It's the one that's just beta alone, right there. Okay. So this is beta again. So the S&P 500 SPX beta, I know many of you know this already, equal to 1. It's a measurement over a particular range that we're looking at beta, and it just compares that volatility over time. Now, the one thing you might not want right now are high volatility stocks. So think in terms of relative strength. And also the second component would be beta. And what some traders will do, investors, and I've seen this plenty of times before, is they're going to look at something less than or equal to 0.7, right in that range. And maybe it's in the 70s. That's okay. Maybe 70s, but I'm just using, 0.7 today. So it's less volatile than the market. And like I said, less than or equal to, so lower than that number as well. So you look at the S&P 500, all these incredibly high, very, very volatile. So if the S&P starts to drop, and what was the first thing we were looking at here? SPX. We were saying if this guy does begin to drop, I've got some additional information. I'll go through. We don't have time today, but on the Straits of Hormuz and sort of risk factors to look at that could ramp up the VIX. And I'll talk about this in that class tomorrow. But just generally speaking, if it were to come down here, those companies that are not, we want to have, like I just said, a lower beta. We're going to use ThinkScript to help us with this. Lower beta than the market, less than the market. And also, we're going to be having companies that have relative strength that is stronger than the market. Our focus today is really going to be twofold. And this can be an interesting strategy. It could be an interesting concept, particularly when there's the possibility of a major ramp up in volatility. And folks, we've already seen, more than the seeds of that right now. When we go over here and we take a look at the VIX itself, yeah, we have been holding above 25, holding. Not just a quick spike up and down. This is holding now above this range, and I'm pretty sure it all centers around that bottleneck around the Straits of Hormuz right now in terms of oil. And I'll tell you, there are some ways that could ramp up, things to be mindful of that could unfold. So just a little side note there. Under those scenarios, relative strength to the market, where is the money potentially flowing into? And do we have smaller volatilities within that basket of stocks? So let's do it. Quick note though, super fast. CL. Wow. It looks a lot like the VIX, kind of. Well, I mean, it's a little bit high, but we came up as high as these levels. You can see on the 30-minute chart. Massive spike over here. Sometimes, now not every time. Just visualize for a second, you guys, if we are looking at the daily chart here. Let's just pretend this is the daily chart. And we're just looking at a stock over here. Sometimes, not every time, but sometimes when you get a stock that runs up big like this, do we not expect or anticipate? Sometimes we have higher expectations, but do we not have those expectations that maybe prices, if they jumped up here one time to a major high, that if they begin to make higher highs and higher lows again, that they could reach those peaks again, or possibly even higher? That's the question mark. I've read some of the analysts out there are saying, you know what, $100 a barrel is not what it used to be because of inflation and other things. And besides that, the U.S. is, well, in a lot of ways, if energy independent to a degree, much more so than previous. So there's some insulation there. And by the way, South America generally is as well. So the Americas, but that could change if it's different parts of the world too. And some are saying if it goes above 150, that's kind of an issue, especially if it holds around 150 for a while. That's where it can get a little crazy. But I think this can be a good also barometer as to volatility right now. I mean, it stands to reason, right? But if this continues to make higher highs and higher lows, putting more risk, this is another measure or metric that we could actually use for volatility in the markets, perhaps. All right, so let's do this. We're going to go right over here into a scan. It's so simple. This is so basic. I made it way too complex initially, but this is our scan right here. I'm going to show you a cool little trick to use it, and this is it. This is all it is. We've just got RS because we're looking at the RS indicator itself. Now, what this does, it takes the RS of the close and it's just scanning across whatever basket of stocks we're after. And we're making it relative to the S&P 500. And the scan it's the highest in the last 20 days. Okay, the concept behind this is I played with this a little bit. Instead of, remember those lines we were just looking at, those RS lines for like energy on the 1 week, they were going like this? That was a 1 week. We're saying now we want the highest over the last 20 days. And you know what that oftentimes represents, folks? It's at the 20-day high right now. This way, we know the relative strength compared to the total market out there. We know it because it's already at a high. We're finding those that are at a high right now. What does that sector, what are those sectors? What are those industries that fit into that group? That's our focus today. Okay, we're going to throw in the beta as well, but if it's a 20-day look back here, so we're just saying the highest, H for short, you got to put in highest, relative strength that we've defined, comma, sorry. Here I am looking down and looking up at the same, there we go. We got to put a comma in there over the prior 20 days. And what this does is it looks out over a month time. I mean, if it's 20 days, it's kind of like a 20-day breakout channel, but we're using an RSI or RS. In other words, relative to the market. Where could that money be flowing right now? So simple. You're looking at it right here. Let me just give you an idea of what these look like. Yeah, let's go back to this. ADM. Okay. Seeing some strength. How many companies out there in the S&P 500 are you getting breakouts with right here that have run up over? I mean, this is not, I mean, this is like the markets have been showing weakness through here, and now we're getting, an RS that is a 20-day high. So it could tell us a lot about where there could be less volatility and strength. Come on over here. If we take a look at the Analyze tab, I'm just going to go into fundamentals here and highlight, okay, consumer staples. But what did these guys do specifically? And think about where they're at. Think about where, where they serve. Okay, human and animal nutrition ingredients, basically food, folks. Okay, food. Now, if you come over here, U.S., Switzerland, Cayman Islands, Brazil, Mexico, Canada, United Kingdom. It's outside of, let's say, for example, the Middle East. And that's a general theme you're going to find with some of these too. But this simple scan can help get you there fast. I'll just share it right now before I forget. So you just all have it. Let's see. It's so simple. But the longer we do ThinkScript, I mean, there are easier ways to get this done. But there it is right there, the simple script. Yeah, so see, Charles says, Mike, what is the goal of identifying stocks sectors with the highest RS? So what we're looking at here, we're looking at relative strength, and all it's simply doing, it's a great question. And let me clarify something here. So when we look at relative strength, we're saying, how is a company's price performance doing its relative strength compared to the S&P 500 index? In other words, on that very first, I should actually go back to this. On that very first grid that we looked at, and I'll just go full screen here, the one I shared earlier, we're just looking at how is their price performance divided by the S&P 500. In fact, if I break this down right here, Charles, this is where it's at. I'll click in here. You're just going to see it showing up. You have to go inside of one. There you go, right there. Relative strength to what? The S&P. And all that is just an indicator we've added, and here it is. We'll just pull it up right there. So it's just a relative strength compared to the market itself, and we're building on that right now. Okay. So it divides it by the S&P 500 itself, and that's how you get it. It's a great question, because you got to know that, right? To get a sense of what's going on here, why relative strength would be going up. In fact, we could put a relative strength line on right now, and you're going to see it going up. In fact, let's get rid of these. We don't need these right here, but I'm going to go ahead and just put in now the relative strength. And it's not the relative strength index, the one that Wells Wilder built, the RSI. That's not even in here. But if we click on it right there, notice the default. We can make it relative to whatever we want, but I'm going to go over here and we'll just make that a little thicker to see it better. And there you go. Is it hitting a 20-day new high? Yes. And ultimately, what we're looking at behind the scenes is this right here. We're making highs, and it's right at a high right now. Believe it or not, we have quite a few companies that are doing that right now. ADM is one of those. Okay, let's go back to that scan real quick, and I'll just highlight these. We got 62 that are running up. Now, some are going to be stronger than others, but now that the S&P 500 sector is showing some strength, what you can do is you can go in and look for others. Now, what else was on there? Well, there's some others in here too. Oh, look at CVX. Chevron, we know that company, right? Say almost all of us do. Let's go into CVS right now. CVX. Sorry, 1 second. I want to do this. I want to at least highlight for you folks the betas. Now, we're going to enhance this search to add the beta. I haven't done that yet. The beta is 0.66. What's the beta of the market? The market, by definition, they keep it at 1. So you know what the relative volatilities are. But if we come over here and we say ADM, well, ADM is 0.66. That is less than the market, right? What we'd want to avoid is anything market or above for sure, but even above 0.7 is what we're looking at. But that's in staples, and staples will generally have that. Let's look at another one, though. I don't think this one might be filtered out. Let's just see what this is. I haven't added the beta in yet, but can you see over here the strength Chevron. Yeah, and if we get just the specifics, I love to look at the specifics because there's all kinds of macro themes in here too. Just real quickly, integrated energy. This is like, this is integrated. It's maybe not as directly correlated. The cash flows aren't quite linear with the price of oil going up, but folks, it's close. Integrated might be the next group that can really show some strength. Maybe not all of them, but this one is. And so, you know, people looking for bull flags or bear flags or other sorts of momentum indicators could have a basket of sort of integrated energy companies within them. Okay. In that same area, DVN, Devon Energy, coming up in our list, breaking highs. Look at that RS. Remember, compared to the S&P 500. Just as a quick note to help give you guys some insights here too, what would happen if I threw the S&P 500 in here right now? What is my RS, my relative strength, going to look like? Should be a flat line. SPX. Notice the green's a flat line. This is the market relative to itself. It's at a 1. Okay, DVN again. Where might we look for strength? This is just a cool way, generally a big picture on how to do it. All right, let's hit a couple more, and then we'll see where we're kind of at on that. Dell is in here. Dell? Dell Computer. You got a bunch of other energy. There's Devon again, of course, but Dell is at that level. So is Expand. Hang on a second. That's another energy company as well. Costco is up there too. CF. Okay. So Dell Computers. Now this is going to be unique to, there's not too many technology companies that are going to be showing that kind of strength, but is it the highest high over the last 20 bars? You know it. It is. Relative strength important when we're seeing the potential for markets breaking down. Well, let's add the beta here in just a second. I'm going to show you how we can do that so easily, actually. I'll just actually show the easiest way in the world, and we can actually just read the code here too. But for now, there's Dell. Look at Dell. Breaking above highs, folks, holding. That's not a straight line. This is hopefully a straight line over a longer range. Let's see. Notice this is a high here. Resistance, resistance. We broke it. We broke it on an earnings beat. This came up on the screen we did a while back on earnings beats, and you can see it right there. It's holding support there. You got to say it's at least short-term support as it stands right now. And we're just kind of like sort of flagging. This is kind of like an interesting one for the swing trade class in a sense, because here you go. Here's your move up. Look at that. You're just kind of holding sideways there. In other words, what does the flag pattern projection look like? Easy on this one. All you do is you take the move up here, you draw this price range off that low. So price range here to, I better do a dotted line. I might not be exact. I'm just eyeballing it. Is it somewhere here? Is that equal? I'll just say here somewhere. So this would be what's referred to as a T2 target. You guys tell me. You guys tell me. Was that an easy way to spot it? That? Just relative to the market. But what I like about this is it's looking at potential money flows. Where's that money going? Money flow. Also my initials here. But where's it going? Well, it's not coming out of this. It's holding that range. So that can show us something now. Wow, the beta on this is exactly the market. It's not 0.7. Now, we're throwing beta in as an example. It's not to say that you couldn't look at these. You just need to be mindful. If it reverses, it might reverse, according to the beta, somewhere along the lines of the volatility of the market. Right now, though, we're not seeing that with the possible bull flag pattern on Dell. Kind of stuck out like a sore thumb in terms of a possible flag pattern there. Now, what was CVS, I'm sorry. CVX. There you go. This one would have hit it. It's integrated. This is a big, huge company. 0.65 beta. Again, less than the 70. Okay. So you got a few things going on there. These are like fascinating ones to kind of keep an eye on. What's been moving? I did have to take a look at Costco. Let's just see Costco here. Yeah, Costco. So Costco, where's price action? It's not above here, but RS is slightly above. Let me show it to you. You got to pull these up to see it. You see it? You know what this can also be? This can be an early warning sign of a breakout. Even higher, believe it or not. It could go higher here. It's possible. Costco could go higher because its relative strength compared to the market. In other words, if money keeps flowing into this company, it could actually break out. Now, it did have a positive earnings. Well, market responded positively. I'll just state it that way. They may beat earnings. In fact, I'm just going to check. At 4.58. Oh, 4 cents. Not by a lot, really. Roughly 4 cents. The thing is, though, with Costco, it's kind of holding its range. It's kind of a staple in a sense. If things get worse, maybe people that have a Costco membership, they just buy discount, right? I mean, there is that angle to it. Was DG in there as well? Dollar General? No. Okay. I don't know what's going on with that one. Oh, DLR. No, that's different. But that's your list. You got 62 companies. Starbucks is in there. Ross Stores. Now this is kind of a discount sort of. It's kind of like sort of like a Costco too, like a TJ Maxx. These two, S Bucks. Okay, really showing some strength over here. But price wise, kind of some highs, and there you go. This is wow. This has really been on a tear. Hey, back to Dell, just because in this class we'll do this from time to time as well. This could be an interesting. Well, no, it's not really. You know, perhaps if it breaks above a range over here, we could look at maybe a breakout or like an example trade if it tests a bounce off a support level. But right now it's in this range bound area. All right. Yes, I'll share that scan again so you guys have it. Let's see here. Probably one of the most simplest ones I've ever done, but equally strong in a sense, powerful because it will find so many different categories. We'll build on it too. I'm just going to show you guys how to add, build to it. But yeah, I'll show that in the box here. So there you go. There it is again right there. All right, so here we go. Let's go back over into the scan tab. And if we just wanted to take a look at the beta, we got 62 here. By the way, these would be very fascinating ones to look at. We can easily add the beta in here as well and sort it that way. So instead of filtering out the beta, so you don't even see these companies, couldn't we just do it? I mean, actually, we could just build it right here because I believe this is even easier. Just go into the stock and just scoot on down here. Just add one little column. There it is. That's the one that works, right? We're gonna find out if it is right now. But if you wanted to filter this out, there are two ways to do it. We want to say the maximum instead of a minimum. The maximum 0.7. Okay, we had 62 here. We want it less. How many are we going to get now? 28. So quite a bit less. And by the way, these categories are going to be in those areas that are just generally lower volatilities. I mean, sub-industries, look at ag, utilities, fertilizers, multi-utilities, oil and gas. We looked at a few of those, DVN, CVX, to name a couple. And even some farms are in there. Really? LNT. No, that's not one. I just saw pharmaceutical. Didn't I? Yeah, right there. J&J. Okay, J&J's in there. Johnson & Johnson. But they all fit on, by the way, the very bottom, alphabetical order, there's Exxon. So very similar to CVX. Integrated oil and gas. Okay? But if you didn't want to do this, you could just take it off. So there's two ways to do it. I'm just going to allow you guys to add that very easily yourself, just right there. But look at this. If I just click over here, customize, another way to do it, beta. This is the one that works, by the way. And I'm going to pull it over here. There you go. Is it all there? It is. But let's add those others in the group here. Okay. About 32 others, right? We've got to take a look at or so. Not 32, I'm sorry. It's only, what, 54? That's interesting. It dipped a little bit. Anyways, maybe, it changed. I don't know. Anyways, this is the number we're getting right here. So look at this. So even if you wanted to look at some of these over here, you could do that right now. There's your Dell, for example, which was right at 1. Some of these are in the 90s. Okay. So some cool things to look at here. Now, do we need to stop here? No, we can keep going. Let's keep going. Let's do one more that we're just going to build on the fly right now. In terms of companies, let's say breaking above a significant, I don't know, moving average, price range, whatever we want to do. So maybe lower type beta breakouts or something like that. Okay, but by the way, so yeah, there's another way to sort it here. You can get a full list and then just go down if you wanted to and say, well, these were the ones. See, there you go. APA, just above 0.7 delta. These were the 32 that were showing up. Okay, you guys got that. So we got that down. Let's go over here. Let's just start off with something new. Still looking in the S&P 500 for the simple search. Again, so we're in Scan tab. Got to be in Stock Hacker. This is the group we're looking at. Public folder, S&P 500. Watch this. What if we said study, just building out on the beta a little bit. I'm going to pull this up. We're going to just create one super easy and super quick. Add the condition. We're going to say that the study itself, let's see. So actually price, we're going to do a couple. Price, and that's going to be the closing price has crossed above a moving average. We could say something, see if it's above the 20, that could be interesting. I might do, instead of that, this is going to be super simple if we do it this way, but we'll just say, okay, price closes above the 50-day moving average or something simple. Day moving average. This is kind of an intermediate term time frame, and we'll say it did that within the last 2 days. Let's see, do I get anything coming up? Well, I'll say 3. I got to make sure we get some companies here. So it just went above the 50-day moving average in the last 3 days. Let's scan for it and see what we've got. 22. Okay, cool. So we got 22 companies in here. You got your beta lined up already. So you can either have the beta column, folks, or again, just go into the add filter over here and scan it over here. Excuse me, just put the stock in and add beta. That'd be another way to do it. I'm gonna leave it open for now, but it's such a short list anyways, you might as well see what else is there. But some people do like to filter it. What else do we have in here? So it's broken above that level recently. What about CLX? This is one we looked at a long time ago. CLX NEM. Clorox is clearly in the household, household products. Oh, okay. So within the last couple of days, it broke above the 50, but it's maybe down below it right now. I'm going to show you this. If we add to our scan, last thing here, let's just do this. Let's just make sure that price is, closing price is still greater than the simple moving average as well, because we're getting some that crossed above. True, that's what we asked it to do. It crossed above, but now we're saying, yeah, we want it to be above there, but we want to still, I mean, we wanted to cross above, we wanted to hold above too. It needs to be above there right now still. Study simple moving average of our 50, 1 bar right now. It's got to be above it right now. You see the distinction between the two? I will say this, CLX must be very close to its 50 because we just crossed above it recently. We'll prove it here in just a second. But let's scan this. See, it's going to be less than, half. It's exactly half. So these companies broke above and they are holding. CAH is one of them. There you go. Okay. So relative strength not up there. But what did it do? It just broke above a 50-period moving average. And like we said, that could be an indication of an extension of the underlying trend. Some people will use those. Here, let's throw it on real quick. and we'll wrap it on that. But yeah, there it is. It's perfect. We got our 50 right here. We got our 50 right here, and we're going to take a look at this one. We'll see it. There it is. So we crossed above it. Looks like yesterday. It was within 3 days, and beautiful. Look how well it's been holding that 50-day moving average. RS, strong. Is it at 20-day new highs? No, but it might be soon. This is an intermediate type trend. See, all we're really doing is we're using this under volatile market conditions where things could be falling apart. They are for a number of companies out there. If you looked at the sectors and stocks, it doesn't look good, but this is a small basket of companies where it might look better. In fact, just a quick glance. Let's just get a visualize. That's a sea of red. Now there are some green. There's some green shoots out there. You've got we got Walmart, yeah, some others in there. There's your energy area, right? But generally, that's a big red cloud. But this could stick out. Simple ThinkScripts can be very, very helpful. All right, and easy, and they're very quick to run. The computer's fast on getting those out for us, right? All right, so that's what we've got there. Oh, by the way, I did want to take a look at CLX because it must be close to the 50, which could be interesting too. Yeah, see, there it is. But you have to say here, is there support on this household staple company? Maybe so. Oh, that went down again. Maybe there's some support, but a lot of folks would say, get me above that 50 before we look any further. All right, everybody. That's what I had for you today. Really looking at strength in the market under conditions of volatile conditions too, right? We wanted to look at that, see what was really moving out there. RS can help with that, other indicators, but also that reference of beta can be helpful. Folks, if you did get some value out of this, do me a favor, just smash that like button. Lets me know that, this was, there was value in it for you, only if there was value. But yeah, give that a smash. And then, yeah, give us a follow here on Trader Talks. Love to have you guys on board with us over here as well. If you're not already, 184,000, as it says right there, subscribers. And love to have you all here. All right. Hey, thanks so much, Kevin, for all your help in the chat. Again, follow us, Kevin Horner CS, Mike Fairbourn CS. And you'll see some of Kevin's classes right down here. Be sure and check out his Trader Talks every morning. It's great stuff if you haven't already, folks. But look forward to future discussions. Definitely more to discuss tomorrow in our markets and sectors class. And you guys have a fantastic rest of the day. Oh, let's see. The updated script, Jeff, just throw that beta in. Sorry, we didn't have time to do it. Just throw that in up top and you'll be set. That would be right up here, just in that beta. Just add it in or just put the column in. You can find it super, super quick. That was the only adjustment we made. And then we just build a quick one in Condition Wizard. But great to have you all here. Folks, have a great rest of the day. See you next time.